What is a stock market? What does it do and how does it work? Number one, what is stock market? The term stock market refers to several exchanges in which shares of publicly held companies are bought and sold. Such financial activities are conducted through formal exchange. And we are over the counter OTC marketplace that operate under a defined set of regulations. Both stock market and stock exchange are often used interchangeably. Traders in stock market buy or sell shares on one or more of the stock exchange that are part of the overall stock market. The leading US stock exchange include the New York Stock Exchange, NYSE, and the Nasdaq. Number second, understanding the stock market. The stock market allows buyers and sellers of securities to meet, interact, and transact. The markets allow for price discovery for shares of corporations and serve as a barometer for the overall economy. Buyers and sellers are assured of a fair price, high degree of liquidity, and transparency as market participants compete in the open market. The first stock market was the London Stock Exchange, which began in a coffee house where traders met to exchange shares in 1773. The first stock exchange in the United States began in Philadelphia in 1790. The Buttonwood Agreement, so named because it was signed under a buttonwood tree, marked the beginning of New York's Wall Street in 1792. The agreement was signed by 24 traders and was the first American organization of its kind to trade in securities. The traders renamed their venture the New York Stock and Exchange Board in 1817. A stock market is a regulated and controlled environment in the United States. The main regulators include the Securities and Exchange Commission (SEC) and the Financial Industry Regulatory Authority uh, FINRA, which is also known as FINRA. The earliest stock market issued the dealt in paper-based physical shares certificates. Today's stock market operate electronically, as we also know, because you know everything we know. But in this video, third topic, how the stock market works. I will let you know. Stock markets provide a secured and regulated environment where market participants can transact in shares and other eligible financial instruments with confidence with zero to low operational risk. Operating under the defined rules as stated by the regulators, the stock markets act as a primary markets and secondary markets. As a primary market, the stock market allows companies to issue and sell their shares to the public for the first time through the process of an initial public offering IPO. This activity helps companies raise necessary capital from investors. A company divides itself into several shares and sells some of those shares to the public at a price per share. To facilitate this process, a company needs a marketplace where these shares can be sold, and this is achieved by the stock market. A listed company may also offer new additional shares through other offering at a later stage, such as through rights issues or follow-on offering. They may even buy back or delist their shares. Investor will own company shares in the expectation that shares value will rise or that they will receive dividend payment or both. The stock exchange act as a facilitator for this capital raising process and receives a fee for its services from the company and its financial partners. Using the stock exchanges, investors can also buy and sell securities they already own in what is called the secondary market. The stock market or exchange maintains various stock level and sector specific indicators like the S&P Standard and Poor's 500 index and the Nasdaq 100 index, which provide a measure to track the movement of overall market. Following an IPO, the stock exchange serves as a trading platform for buying and selling the outstanding shares. This constitutes the secondary market. The stock exchange earns a fee for every trade that occurs on its platform during secondary market activity. Now we let's move on the what are the functions of a stock market. Now we understand the functions of stock market. The stock market ensures price transparency, liquidity, price discovery, and fair dealing in trading activities. The stock market guarantees all interested market participants have access to data for all buy and sell orders, thereby helping in the fair and transparent pricing of securities. The market also ensures efficient matching of appropriate buy and sell orders. Stock markets need to support price discovery where the price of any stock is determined collectively by all of its buyers and sellers. Those qualified those qualified and willing to trade should get instant access to place orders, and the market ensures that the orders are executed at a fair prices. Traders on the stock market include market markers, investors, traders, speculators, and hedgers. An investor may buy stock and hold them for a long term, while a trader may enter and exit a position within seconds. Within seconds, you are getting my point. A market maker provides necessary liquidity in the market, while a hedger may trade in a derivatives. Now let's move to the how stock markets are regulated. Most nations have a stock market, and each is regulated by a local financial regulators or monetary authority or institute. The SEC is the regulated body charged with overseeing the United States stock market. The SEC is a federal agency that works independently of the government and without political pressure. The mission of the SEC is stated as protecting investors, maintaining fair, orderly, and efficient markets, and facilitating capital formation. Companies listed on the stock market exchanges are regulated and their dealing are monitored by the SEC security. In addition, the exchanges set certain requirements such as mandating timely filing of quarterly financial reports and instant reporting of relevant corporate developments to ensure that all market participants are equally informed. Failure to adhere to the regulations can lead to suspension of trading and other disciplinary measures. Now let's move to the other point of view. What is the significance of stock market? The stock market is a component of a free market economy. It allows companies to raise money by offering stock shares and corporate bonds, and allows investors to participate in the financial achievements of the companies, make profits through capital gains, and earn income through dividends. Make capital through gains and earn income through dividends. Whatever I say, listen to me carefully. The stock market works as a platform through which saving and investments of individuals are effectively channeled into productivity investment opportunity and add to the capital formation and economic growth of the country. Now let's move to the next point. What is the alternative trading system? Alternative trading system are venues for matching large buy and sell transactions and are not regulated like exchanges. Dark pools and many cryptocurrency exchanges and private exchanges or forums for securities and currency trading and operate within private groups. I think you're getting my point. Who helps an investor trade on the stock market? You know, stock brokers act as intermediaries between the stock exchanges and the investors by buying and selling stocks, and portfolio managers are professionals who invest portfolios or collections of securities for clients. Investments banker represent companies in various capacities, such as private companies that want to go public via an IPO, or companies that are involved in pending managers and acquisition. I hope you got it my point. Thank you so much for watching this video till the end.